Hey guys, how's it going? Welcome to a trade recap it's kind of a session recap and a trade recap in one for Tuesday the 12th of July 2022, obviously on Euro Dollar. So kind of recap of the higher time frames, especially if you're kind of watching this at a much later date. But we are selling off extremely aggressively. Higher time frames are very, very bearish. We've obviously had this big daily break of structure here. We're currently on the 4-hour time frame. And at some point, obviously, after a break of structure, we can expect a daily swing pullback. But when you have such strong momentum, or even not even just when you have strong momentum, but after daily pullback, obviously, price can fall for a number of days, if not weeks, because that'd only be a few daily candles. So, whilst I'm aware in the back of my mind that higher time frame pullback can kick in, I'm happy to just keep sort of more aggressively, quote unquote, following the lower time frames, following that bearish order flow. So here on the 4-hour chart, we can see that we had that break of the 4-hour low, and then it's pretty much just being one straight push here. So I'm counting that still as my swing high, and obviously waiting for that pullback to know where the swing low is going to be. So we are within this big range here. Now, yesterday we did have a little bit of a pullback here, right, and a continuation down. Now, some of you may mark that as swing structure, especially if you use certain pip rules, maybe it met the criteria. But for me, looking at it relative to the price swings we've had, that for me is just a pause in price action. If anything, that's more of like an M15 swing. So one thing you need to understand, and why sort of pip rules or mapping your swing structure, if you have it kind of more, let's say, tight and aggressive, and you do map that as a swing structure, or maybe you're more like me in this instance and you view it as one leg, it doesn't actually massively matter that much, because it's more about understanding. If you look at one more, actually I was going to say if you look at multiple time frames, it doesn't matter. But even if you only look at one time frame, it doesn't matter either. Now, let me explain what I mean. So let's say you're someone who maps it very, very tight, right? And you say that this is your swing high. If the 4-hour then broke that high, you go, yes, I'm bullish on the 4-hour chart. But you should have the nuance to not just go, right, I want to buy every single, high low and just expect this trend to continue, because you should be able to recognize, looking at the bigger picture, that is one big leg down. So maybe the 4-hour has only switched bullish here just to facilitate a bit of a pullback into these levels of supply, right? Into the premium, like the EQ of this larger leg. That's what I mean. You can use multi-time frame analysis without even looking at the other time frames, just by zooming out a little bit and looking at the bigger picture. So yeah, the point I'm trying to make here is it doesn't actually matter that much, to a degree, how much you map or how you map your swing structure, right? If you have it that way, or if you have it all the way up here. Because for me, I have it all the way up here, and if price was to break that high, for me that's just, I would call that an internal break of structure, and then I would trade that internal structure, right? But I'm aware in the back of my mind that at any point this is just to facilitate that larger pullback, most likely. So when we then get that break, which I would call a bearish IBOS, a bearish internal break of structure, the same person who had mapped that as a swing structure will now have their swing structure break to the downside here. And now, we're both pretty much just trading the same thing, except I called this internal structure and you called it swing structure. But you should be aware, if you do call this your swing structure, that you'll be aware that it's only going to probably last a little while, right? Until we pull up to this level, maybe it'll only be one or two more bosses, and then you'll be, very on the ball for understanding that this is probably the larger move to go. So even if you got that bullish swing boss for you and you were catching these moves, you'd probably be a bit more aggressive with your targets and, take partials at these highs, rather than going, okay, now we switch bullish on a 4-hour chart, and now I'm going to try and target all the way up here and hold full volume and swing, because you should understand that this is more likely to be the bigger move. Okay, so I really want to make that clear. If you're getting stressed out or frustrated or annoyed sometimes where you're not quite sure whether you should call the swing structure or not, it doesn't massively matter. And that's why, since we've got the advanced TA module as well, where we're now introducing those sort of more internal frameworks of looking at internal structure, that's another way in which you can help with that systematic framework, right, to trade that to the upside. So yeah, for me, I'm counting that as one leg down, but obviously looking at this as a nice piece of internal structure to work within to see if we can get sort of those movements there. Now, we did have a sort of very aggressive level of 4-hour supply as well coming into Frankfurt, because as you can see, this candle's inside bar, it failed to break the prior candle's low, which means we had that fractal pullback, right, giving us a level of supply. So that's why I marked this out on my markup. Right, so then price pulls back up into that level of supply and then pushes there to the downside, which is what's happened during the session. So that just added to the confidence of what we had. Just want to make sure that that's appearing on the lower time frames. Okay, so now if we drop down to the M15, in fact, let's do a little bit of bar replay, because it's usually a little bit easier to talk through my thought process, kind of bringing it to just a pre-Frankfurt there. Cool. So again, let me zoom out a little bit, because what do we have with swing structure on the M15? And this is a bit of a tricky one, because especially now I'm using, a little bit of discretion in terms of defining what is a significant enough pullback to be swing structure. I'm not following pip rules anymore. I know if I'm really being honest, the way I kind of wanted to map swing structure as I was coming in today was really just viewing that as one M15 leg, because if you kind of look at it to relative price action, these for me are those M15 swings. And with the benefit of hindsight, you can almost ignore that, view that as the one leg down, that's the pullback, and then all of this is one leg down. Okay. But obviously if I've marked that as swing structure, which was, at least sort of, let's see, 30 pips or so there. And then we have this as well, right? That's another 40 pips. I knew I was probably going to get a lot of questions as to why, why didn't I map that as swing structure? But, for me at this point, that pulled back to the EQ of that range, we came down, that pulled back to sort of the EQ of that range and then pushed down. So it kind of made logical sense that this was, reasonable swing structure relative to here and here, right? It kind of made sense. But then when we had this big overall swing move and then a down move, doesn't it kind of make as much sense to have that swing structure? For me, not so much. So the way I'm approaching this is I did mark it as swing structure, but it's just the same as anything. Like if we break that and we switch bullish, I'm just aware that this is the bigger leg, and we're probably only switching bullish just to mitigate some premium level of supply, maybe the extreme. And I'm very wary at any point, right? This is going to be the bigger move, and I'm expecting that to happen. Okay, so yeah, hopefully this gives you some confidence if you're getting a little bit frustrated with the mapping of swing structure, that it doesn't massively matter, especially if you're also mapping your internal structure, right? There's slightly larger internal swings that aren't quite swing structure, and we can just keep following that. So if you had this as your internal structure rather than swing, that's absolutely cool. That's probably kind of more in the line of the way I'm actually viewing it, and that one as well, right? So now we're trading between this internal high. So coming into London, really, I'm just kind of focused on this literally internal range here. Like this is the range for the session we're most likely going to be playing within. So we have this strong protected internal high, right? Because it took out this low, and we're looking to target this weak low here. Now, just obviously before the European volume kicked in, what happened? We pulled up and we tried to take out this low here, failed to do so, right? Clearly moved back to the upside, had that sweep of liquidity there. Now, ideally, if you're going to play counter trend longs in the M15, especially when everything's heavily bearish, ideally I would like to see a chock at bare minimum, but you're not always going to get that. So coming into Frankfurt, basically what I'm hypothesizing here is I'm aware that there's M15 supply here, but I'm viewing it as quite weak because it failed to cause price to break below the low. But nonetheless, it's still supply. It did cause price to spike it. It's still valid. It's still something I'm wary of. Okay, but really what sort of my idea for the session is that this is a weak high. We've swept this liquidity below the low. I'm going to try and target the pullback up into this level, right? And this is the unmitigated flip extreme of the strong high, right? This is going to be the most high probable position of the session if we get up there to try and continue the overall bearish swing and internal trend. Okay, so that's basically it. Very, very start of the session, looking to play the pullback and then look to play the pro trend short. But very aware that this is here and we could easily tap into there and go. So dropping down to the M1. Okay, in fact, let's just delete all this so you can kind of see it up from scratch. Okay, now this is the type of entry I've seen so many times. The fact that this happens at the start of the session is a big sort of tick in the box of why I was confident to take this as well. Okay, so we had the sweep of the low. We now can hypothesize that this is likely weak highs because it sort of failed to do its job, right? And we can look to target up here, but I'm very wary of this level as well. So that's the sweep of the M15 liquidity. We then obviously also have this M1, these M1 lows here, right? So we have a nice liquidation into the sort of external range liquidity sweep into here. Now, the M1 chock is all the way down here because this was an inside bar. Yeah, they haven't changed the data. Low. The lows are both the same. So both those lows are 090, 090. So that is your true M1 chock, right? But what gets me more interested, so this is around, just before, it's about 6:45 before Frankfurt, is seeing essentially the M1 actually switch bullish, like seeing that more swing break of structure, clearly seeing M1 supply fail and M1 demand take control. For those guys who have watched the advanced stuff, right, you'll know, like for instance, we have clearly the supply range, right, bearish order flow, and then what happens if you push price forward a bit is we break out of that range, right, and then we know that this becomes from the low to the high, becomes our demand range, and now we have potentially bullish order flow start to kick in, and we can look to enter within these you just draw on, where is it, lower time frame demand range, right? These levels here, because then we expect these demand ranges to hold until what? Until it takes out the start of that bearish leg, because it's failed to take out the low. So now we expect those demand ranges to hold until it takes out those highs, right? That's essentially what I'm trying to show you here, is not just an M1 shock after a sweep and getting in here. Of course you can do that, but actually seeing that order flow shift from bearish order flow to bullish order flow and getting a nice close above that M1 high, right? So now let's bring it back a little bit, kind of to well, we'll leave it around here because I think it goes up a little bit higher before Frankfurt. But kind of, yeah, to bring it to about 7 a.m. where I'm looking for potential entries. So at this point, it looks kind of, you know, a little bit choppy, a little bit like where exactly would you enter if you wanted to get long. But when you actually draw it on, you can make a lot more sense of it. So we've had the liquidation, we've had the sweep of external range liquidity, we've had order flow switch from bearish to bullish, especially as we have a M1 swing boss as well. If we now mark on this extreme level of supply, we can see that price reacted into it, okay? So you get the reaction, price fails to put in a lower low, and then what do we get? We get a break and close above that level as well as the boss, right? So now we have a flip. So anywhere from the high of that reaction, right, if you were to take the whole range, the low of the reaction is technically your flip, but obviously we want to refine it a little bit more. So the highest probable area to enter on a flip is always going to be the extreme of that reaction leg, okay? So now this looks like a pretty good area. How can we also build confidence? Well, are there any unmitigated levels behind here? Well, we have this extreme here, which we can see was mitigated and tapped into. We then have that next level up here, which has already been tapped into twice and led to another movement away, okay? So now, for me, I have a lot of confidence that this is the unmitigated extreme. We have a demand chain, so we're following that bullish order flow. It also swept liquidity behind this M1 low here, right? And we also have inducement, right? Nice, perfect inducement. So yes, price could potentially, you know, mitigate sort of more this decisional and go away. But at this point, this is how it looked come into the session market volume. We've already had a bit of a movement from away there. It's obviously failing to go. These are now weak lows, right? This becomes a level I want to go. Now, when would I not consider setting an order here if it was if it was like this, if it wasn't already, you know, if it was unmitigated like it is now, when would I not be interested? Well, if it has already had the pullback and then broke the high, right? Because at this point, if you look at the swing structure on the M1, we've had this movement, we've had a down movement, and then we've broken the high. So let's say price came into here, right, and reacted off this decisional, and then broke that high here. I wouldn't set this order. I wouldn't be interested, or I would have cancelled it at that point. But the way you can see is it's one movement up, and this high has not been broken yet. So this is the pullback, right? So now I'm looking to get in on where? The unmitigated extreme, which is the extreme of that flip, okay? So that's the flip. Right, and now we're trying to catch that pullback into here, and then that goes. Whereas if I set my order here, price then pulls back, but then didn't tag me in and broke this high, well, now what we've had a higher high, higher low, higher high. So I'm going to cancel my order, because then if price comes down to tag me in, what's it done? It's had to switch bearish to get me back in, and I don't want to be doing it. These can play out, but that's not what I'm interested in, okay? So I'm just viewing that as that one pullback to try and catch that M1 high low to target here, but ideally beyond, right? So set my order here as price was coming down. I actually saw this a little bit late as I was making coffee, stupidly at Frankfurt Open. So literally as it reacted away, I was setting my order as it came in, and then it moved away, and I thought, oh, I've missed it now, but I just left, you know, put the order on, and unfortunately came back down, tagged me in. I did actually get a little bit of positive slippage as well. So I think I actually got tagged in around, I think it was bang on 10010, yeah. So that was nice. And then, yeah, so my target in terms of this, now this is where I'm using a little bit of discretion with my management at the moment. I've spoken to you guys about this a fair bit as I'm kind of transitioning, trying to figure out, kind of changing things up a little bit. I'm getting away from partials and looking to more basically hold the majority of my volume in most cases to around that 10R mark, but using a little bit of wiggle room around that. So I'm not just always doing fixed 10R no matter what, because sometimes that's a bit stupid, right? I want to bring in technical levels as well, because maybe 9R is like right into a level of supply. I don't want to just push for that extra R just to try and trade through supply, right? So this is kind of what I'm trying to figure out. And in terms of trading to break even, that's another thing I haven't quite figured out, but the method I'm using at the moment is basically trading to break even once price breaks and closes above where the pullback started to tag me in. So once we get that closure above, then looking to trail to break even. So if we just go back to the M15 for a second, this is, again, the whole idea behind this is I'm trying or I'm hypothesizing that this is a weak high because it failed to take out that low. It's a sweep at session open, and I'm anticipating that we're going to get that movement up to here to then look for the short. But I'm very, very aware that this is still a level in which price could tag and continue going down. So what my approach was when we get up into here is I was going to exit for full volume if we got a bearish M1 chalk, and then potentially consider taking that short entry from here, even though it's not ideal because it's a bit more of a weak high. Like, happy to look for that short from here if we get it. And that was my plan. So initially it was quite easy to manage because we rocketed up. So again, actually, this is the bit where I can see why some people would kind of shit their pants sometimes and exit trade early. But as it starts to come down aggressive like this, right, you just have to ask yourself, what's going on here? Well, all it is essentially a confirmation entry of this level, because what happens? Let me just get the pen. We come down, we come up. All right, we come down, so then we break up, and you're just getting a confirmation entry. That's the new demand that broke that sort of eye chalk high, whatever you want to call it. Your change of character. So this is a level in which potentially you could take an entry if you miss this one, or scale in if you're super, super aggressive. Not for me, but that's just another way. It's super easy, right, to understand what's going on, and you don't have to worry if prices coming back down below your entry level, because this low here ideally should hold, right? So yeah, so then it was quite easy to manage. Obviously, session volume kicking in and starting to move to the upside. Obviously, this is lovely, what you want to see when you're in a trade, moving nice and quickly. Now, as we get into here, this is where, yeah, I'm thinking, well, I'll show you. You get this movement here. When I got this kind of thing, shit, all the doubts start to come in. You think, should have just taken that quick counter trend trade, been aggressive, should have done my full volume, around that level. And that's when I started doubting it. And I was like, nope, just stick to your guns now, like leave it at break even. And it is what it is, it will play out. And if I get the M1 chalk, I'll look to get involved. So just keep calm. And unfortunately, when it went up here, it never gave the M1 change of character. Almost did there, but you see how it didn't take out the low. It continued up. So I have my stop trail just below here. And then we get the movement to the upside here. So now at this point, this is where I've got high confidence. Okay, we spiked up through here. M15 supply has now failed. And this is where I'm looking to go. So I had my TP set just below here. I think it was 1.38, just to give me a little bit of wiggle room as well, just before the zone, obviously with spreads and all that fun jazz. And obviously if it just rejects the range rather than the pivot supply. And yeah, fortunately it was a nice trade and timed me out pretty damn quickly. So it was a breeze to manage, apart from this bit here where that's when I was like, thought it balls it up a little bit, but it is what it is. Worked out pretty nicely in the end, and then we got up there. So that was a very, very tidy trade, and yeah, very, very clean, in my opinion. A bit more of an advanced entry model in terms of some of you guys won't be, maybe, if you're a bit newer, used to seeing this type of entry, but you see how it fits the exact same framework. It's just a little bit more of a corrective move overall, because obviously the session volume hadn't kicked in just yet. But these are the types of trades I've seen a lot, and it really is to do that it happened when it happened. Like literally coming into Frankfurt Open, I had high conviction of the overall kind of high time frame or medium time frame play I'm trying to play here. And this was the unmitigated extreme that had liquidation. Essentially, the mitigation of the liquidity, the ERL sweep, the external range liquidity behind that M15 low. We now have a weak high to target. It's the extreme of the reaction leg that swept liquidity and had inducement. So yeah, I was happy to get there, because if this was going to fail, then it's likely going to take out this low anyway. This was kind of the last point that I had to hold if this move was going to happen. And there was a more than enough RR to target that weak supply there. Okay. Cool. So then we come up into here, and this is the main event. This is what I'm most interested in, which is trying to catch that M15 continuation, right? That internal and swing trend continuation. So we get the M1 chalk. Yes, there's no nice clear liquidation, but for me, this is a decent sweep, because we do take some liquidity that would have been behind that high with the early sellers that may have been stopped out. Get some buy stops triggered, but it's more about the nature of price action, right? Remember, this is a high probability M15 POI. Why is it a high probability M15 POI? Because if you want to, obviously it's not the most well priced in the world, and we could have that deeper pullback, etc., but I'm happy to keep following this internal trend. This is the unmitigated extreme of this internal range, right? This is a strong internal high, which we expect to hold until it doesn't, right? We expect those ranges to continue going. Okay, so once it comes into here, this is when I'm, it's all systems go. I'm just using the M1 as a timing mechanism to help give me or show me that this level was going to hold and prices are going to break straight through. So we see that sweep, boom, that's enough momentum. Straight away, I've sent my order. Now, I'm looking to get short within here. Okay, just took the whole range in this point. But as price came down, it just continued to shoot off. And then once we got this, so I start to see we're reacting to demand. So as price reacts to demand, that's typically when I'll draw it on as well. So we get a reaction from here. And then waiting essentially for price to give us our fair reaction and close below. So just going to draw this on. So I think it spiked it quite a few times. If memory serves me correct. Yep, there we go. And I thought it was like waiting for the close. It wasn't coming. Because for me, I need a close below the flip. Okay, so now we have it. So at this point, this is when I then cancelled my order on the extreme, because I know a lot of people have this, right? If the flip doesn't sweep liquidity, you're going to take the extreme. But you have to realize kind of that rule is mainly for when like price comes up into a POI, right? And then let's say you kind of get this, and then you get your flip here, and then a chock, and price hasn't moved that far, right? Kind of this was like say like the last pullback, and now you have this POI here, and you have this POI here, right? That's typically when if it doesn't sweep or whatever, it can tag you out, and that's why it's better to take the extreme. But in this instance, like look how far and big this rejection is. Like we've had that M1 pullback and we've had that movement down. The odds of it coming up to here like are slim. Like this is a massive rejection, and this is where you may just want to follow order flow and kind of break that rule. Whereas if that kind of happened up here and then you had the flip and the extreme, right, and it's quite near together, that's when maybe you want to consider like paying a bit more attention to that rule. So yeah, it's hard to give you kind of a mechanical way of when not to pay attention to it, but these are the sorts of instances when it's with strong momentum, it's not always going to pull back. Okay, so for me personally, I was happy to look to get involved within here. I think I used a 3 pip stop on this just to try and make sure I try and get tagged in around the EQ. And basically looking at the inside bar as the unmitigated level, and yeah, just never got tagged in as price started to shoot off. Sorry, I just ran out of space on my hard drive and the video stopped recording, but hopefully that's saved down and we can, I guess, do this as a part 2. So yeah, so kind of once it, let's see, I think it was a bit more forward than this. At this point, yes, that's when it was. We pulled back to the range, we mitigated the flip of the range, and then tanked down at this point. So this one was like, right, this is done, cancelled my order. And then this is where FOMO kind of got the better of me. I thought, right, we're going to get another leg down here on the M15. And I kind of just wasn't really thinking, and just kind of literally just looking at the M1 and just thinking, right, this bearish order flow is going to continue. This has pulled back and mitigated the prior supply range, so we're just going to keep following that. This swept liquidity here. Excuse me. It also flipped this nice demand level, right? Reaction from demand, first bit a high, mitigates the extreme, sweeps liquidity. Like even anything as well, there's another flip that it actually mitigates, right? Reaction from that level there, and then it mitigates here. So it's like, right, there's no way price is going to break this high. Even though I could see like the doubts I did have in my head was no inducement in this leg. And whenever you see those big candles, almost like a news push, and no inducement, these not nearly always, I don't have the exact stats, but they fail way more often than they play out. Especially as well, we're like coming off the extreme, big V-shaped return. For a split second I thought about cancelling my order, but I don't really also like doing that. I kind of just want to, like, if you set it, just commit to it, and then boom, straight out. Well, yeah, with a little bit of slippage as well, actually, which is always fun. And then we're out. But obviously, yeah, if I had looked at the M15 at that point, I do have to be aware that we did have this level of demand that caused a bullish chock. But when I'd set my order, this low of the pivot had actually been broken, right? So price broke that low, then I set my order, and then it was coming back up. So it's kind of like, well, that's gone, maybe we're going to go now. But obviously you have, range demand. You're not selling at a good level. You're chasing price very, very aggressive at this point, and it's not really worth it. Would I have set my order here if I hadn't have already banked that profit? Knowing what I'm like, arguably not. A lot of the times, if I miss the initial move, I'm very good at not chasing price too much for the most part. But as you can get, right, when you make good R, you can get a little bit sloppy because you've kind of almost feel like you have profits to play with, and you can be a little bit overconfident, right? So yeah, bit of a tricky one. There's logic behind it, but yeah, it's always easy to dig into losses a lot more and say, it's a silly trade just because you lost. And maybe you did, if it played out, you'd be like, well, I'm following order flow, blah, 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 blah. But yeah, we can see here, right, this is not the smartest trade in the world. Then it did actually come back in and mitigate that flip, use it as inducement, and then sold off and tried to take it low, which I think it eventually spiked it, but we haven't had an M15 close yet below. And let's see where we're at the moment. It kind of brought it to the end of the session. So at that point, as we're chopping around the bottom, yeah, not really interested in this whatsoever, right? So yeah, a bit more of an advanced trade there on the counter trend long. Don't get FOMO if this isn't within your plan, which the majority of you, it won't be in your plan, because I would say 95% of you should, want to see at least an M15 chock before you take a long. It's very rare you guys will see me take a trade like this, but it just so happened that for me, this was, just a very clean M1 entry model. This was the only POI in which, it could go from, really, that I was happy to trade from the extreme. We had that sweep, bang on session open volume, with high enough risk to reward. Yeah, I was happy to take it. So it is what it is, and unfortunately couldn't quite catch that short. But anyone who takes M15 risk entries, boom, there's another nice trade. I'm not sure quite if the risk reward was that great towards the low. It would have been about 3.4 to 1, which isn't ideal really. But yeah, so I hope you guys took some value from that. If you're trading New York, have a good session, and I'll see you next one. Cheers, guys.